morning. Ira Epstein of Linn Associates with your morning flash update for this Tuesday. And we're now on June 16th, 2020, about 9:25 a.m. Central Time. Look at the stock market. I mean, you talk about follow through. You talk about a market that was yesterday into the toilet at this hour, then turning around, as the Fed chair said, they're going to buy more diverse corporate bonds. And once that happened, the market came to the rescue. The Fed chair right now is speaking in front of Congress. He's got 2 days of question and answer period, so the markets will certainly hang on that. The other part of the market, gold market steady, but industrial metals getting a bid this morning. And as you know, I'm quite friendly those markets because if the economy is going to pick up, which I expect, the demand for those will be there. The same's true in the energy markets. The IEA came out today, and if you get my twice daily written reports, I've done a whole analysis on what the IEA said and how they're looking at energy prices. Bonds and notes, take a look what's going on. Right on down, and that's one of the things we've been looking at. If there's been a downside breakout, as I thought there was last week, this rally we just had, that probably was just a bear market rally, no more than that. And I realize everybody's worried about interest rates going too much higher. The Fed will be there probably to cap it. On the grain markets, there's just not an awful lot of change. You're getting a pullback in the yen. A rally in the dollar at the expense of the euro. Now, we had lost the embedded readings in the euro and the Swiss franc, which tells me that this rally that we just had should be, at best, short-lived. Doesn't mean I'm right in my analysis and I'm not calling the market for you, but when you lose an embedded reading, you often make a run back to the 18-day average of closes. As for the daily data, it's stellar. Yes, you're going to say retail sales up 3.9% from the previous week, and we know they're going to be down from a year ago week. I mean, that's a given with COVID. When you come to the Red Book sales, they were down 2.4% the first 2 weeks of June, down 9% from June of 2019, and they're down 8.3% from the week ending June 13 a year ago. But this is the number that wasn't so great, down 2.4% the first 2 weeks. Then we get to this, which just blows all that away. The May advance retail sales number, up 17.7%. Now, admittedly, this is from May, so we're already into June, but double what they expected. Car sales literally exploded, up 3 times almost what the market was looking for, and April sales weren't as bad as the market had first thought. We then get to the Federal Reserve industrial production and capacity. These are May numbers again, but you can see they're improving here, or are they? Not completely. They're sort of just laying here, not the big improvement. I think we'll see that in the June number. Business inventories, they were down 1.3%. I'd like to see them drop here. April sales down 14, but remember, these are April numbers. The NAHB housing market index, a blowout, 58. They expected a 45. You're back over 50 numbers. I told you, Lennar, sales look good. I was listening to the chairman speak yesterday, and he's expecting a very stellar last part of the year. And as I said, monetary policies are due out this week. They'll be coming from a lot of major banks. We have the Fed chair talking today, in fact, and that is something that you want to watch. And it's amazing how yesterday, as the market was just at the precipice of 1,000 points lower, the Fed comes in like the Lone Ranger, the old TV series, to save the day and makes that statement, and the market turns up. The problem that we have, and the Fed chair said it this morning, is you've got to watch this COVID-19. If it starts creeping back up, if it gains a stronghold again, all the projections, everything the Fed's doing, and they have more that they can do, but it's going to be tested over and over, and that is the problem. And then, of course, we have the fall to worry about. But in the summertime right now, everything's still looking okay. A bounce in a market that fell pretty hard. Now where do you go with all that? And that's what I'm doing. Now, I told you I was going to put together a package for you that combines my morning subscriber video with my afternoon Spider ETF video. We've done that. So if you'd like to see what that's about, go to our website at www.iraepstein.com. Under research, you're going to see when you take a look at either the Spider or the ETF, or, those two, which is one, if you will, and then the morning it gives a combination package. We call it the combo. And I think you'll find it a way to get these pricings down for yourself. Get both. What's the advantage? Well, a lot of you trade spiders, so I'll give you what I'm seeing there, and I generally say you want to make sure you don't get a crazy move in the futures first thing in the morning. So if you're watching the futures one, you're seeing what I'm saying, and I always make mention there. I try to cross-play the two on each other to give you a full package for both markets. Take a look. What does it hurt? You can also click here. That'll take you right to that page. I'm Ira Epstein. You have a great day, and I will see you all this afternoon with our market wrap-ups. Take care now.